a positive one at that, was that there was no hawkish pivot either. The Fed said that it is still leaning towards an eventual rate cut. In fact, there was no mention of the H word, the rate hikes. For now, it seems like Fed is going to hold interest rates for longer, and when inflation does come within their tolerance limit, the first plan of action would be rate cuts. The central bank also said that it would slow the pace of reducing its balance sheet starting June of this year. That decision ensures that money markets don't experience an episode of volatility and stress as witnessed in September of 2019. Now, this can be considered dovish because, slowing the pace of reducing the balance sheet means that the central bank is keeping more money in the financial system. This approach supports economic growth and aims to avoid causing market instability or higher interest rates. Consequently, bond yields tapered off. The 10-year is now quoting at 4.62%. Remember, on Tuesday, they picked up by about 7 basis points. Last night, they were down after the policy decision. They fell by about 7 basis points. So, for our markets, they are essentially flat right where we left off on Tuesday. The dollar index, now that is back below the 106 mark. DXY, as we speak, is quoting at 105.75. And since yields and the dollar cooled off, gold prices, they bounced back. Spot gold jumped by about 1.5% overnight, and it's back above $2,300 per troy ounce. Gold, remember, has an inverse relationship with bond yields and the dollar index because higher bond yields offer better returns, and a stronger dollar makes more makes gold more expensive for non-dollar buyers. So when bond yields or the dollar index drop, gold becomes more appealing. As for oil, that was the biggest skew. We saw another 3% sort of a drop on Brent crude, and this was again on the back of a 5% correction, of about a 2% correction that we saw in the previous session. So what has happened in the last 2 days? Brent crude has eased by about 5%. Now, as we speak, crude prices, Brent crude is currently quoting at about $84 a barrel. Now, as such, there is no reason to it. Yes, crude inventories and the production in the US, it's on the rise. Yes, there is a ceasefire agreement in the Middle East as well. But let's not forget, the war is not over. I think the fall in crude prices is more of a technical one. Remember, Brent was hovering in that range of about $87 to $97 a barrel for the entire month of April. So once we broke below that key support of $87 a barrel, I think that caused some bit of unwinding, and that's why we are seeing this correction play out in Brent crude. Now, this again, remember, is a positive for India. In fact, all three cues, a fall in crude, the dollar index, as well as the bond yields, all three is positive for India. And speaking of, we have had a positive start to the day. In fact, Nifty opened in the red, but we have kind of built up from there. The mid cap and the small cap indices, they are trading, about 0.1 to 0.2% higher as well. And personally, I think I prefer this sort of a start because, remember, when we left off on Tuesday, we had witnessed about a 180-point drop in the last hour in Nifty, and the overall sentiment was kind of bearish. We were awaiting what the Fed is going to do. The expectation was that there was going to be a hawkish pivot, maybe a rate hike down the road, and the dollar index was on the rise, bond yields were on the rise, Brent was also around that $87-88 a barrel mark. So the situation has improved tremendously, yet it's not being reflected in prices. Typically, what happens if you see a strong gap up opening, most of the upside is already priced in. But in a market like this, where we have not, we have started on a modest note, there is still some juice left in the system for retail investors to, take over and perhaps make some money from here on. But on that note, let's also bring on board Mr. Akshay Bhagwat, Senior Vice President of Derivatives Research at JM Financial. Good morning, Akshay. Thank you for joining us here on News 9. We were, talking about the improvement in the overall sentiment since Tuesday. Fed decision is out. No, negative surprises as such. In fact, they sound more dovish than the market was even anticipating. Yields cooled off, dollar cooled off, oil cooled off. But again, the opening has not been something to write home about, right? We are still in the green. We are still staging a bounce back. What's your overall assessment of the market as things stand, sir?
Good morning, Suyash. So the highlight on the prior trading session was the abrupt selling, which came from the levels of 22,800 all-time high levels. Now, probably in the sense which we derive looking at today's market is that it was because it was a truncated week. People are waiting for that Fed decision, and so all this is done now. It's behind our back, and now the markets are back again on a strong footing as the opening goes. Today being the weekly expiry for the Nifty index, 22,500 is a major support level to keep an eye on, because if you look at the current weekly expiry or the next weekly expiry, a lot of put writing positions are at 22,500. One more surprising thing which I like to mention here is that last couple of days, although the markets have been choppy, especially the Nifty index, if you look at the positioning by the FIIs in the derivatives segment, there has been strong buying numbers. The long short ratio has improved to 52 longs to around 48 shorts. So it means that in this choppiness, probably the FIIs are buying into the market. That's what the data has to say. So it's just a matter of time. We will stick to the levels: 22,800 resistance, 22,500 support. The view for the Nifty is positive. It is positive till we trade above the 22,500 mark. Nifty should reattempt the breakout of 22,800, and whenever it does so, you will have levels of 23,000 plus coming soon in the month of May.
All right, also wanted to get your view on Nifty Bank, because, it was due to hit that landmark on Tuesday. We were very close to that 50,000 level, about 25 points shy of it. But then we witnessed about a 600-point crash. Now, this morning also, we have, by the way, taken support at around 49,000. Even this morning, even, Nifty has posted modest gain. Bank Nifty is still trading on a flattish note, but still trading above that 49,000 level. So, does that become a key support for Bank Nifty, sir, in your opinion?
Yeah, I completely agree. In the last few days of the trading, the proceedings, what my understanding is Bank Nifty has strength over the Nifty index on a comparative basis. Now, we were looking at the prior high levels. So if you look at Bank Nifty, the prior high levels of roughly around 49,000, which were seen way back in April 10th, they have been broken out 2 trading sessions back, and that breakout has happened with strong volumes, and that's a positive development for the Bank Nifty going ahead. So yes, the Nifty breakout has not happened, but Bank Nifty breakout is in place. 49,000 is an important level to watch if you are a short-term trader. Yes, the sense is that probably if the indices were to move from here, it will be probably Nifty which will take the lead, but Bank Nifty also you don't see any major weaknesses yet. In fact, private banking names like Axis, ICICI, even the small private banks like a Federal Bank, a Bandhan Bank, all are coming to the rescue. Even HDFC Bank is showing signs of a rebound. So banking pack is still strong till it trades above 49,000. There is a good chance it might make a reattempt for the resistance of 50,000 mark. So stick to the levels: 49,000 support, 50,000 resistance. The broader view still stands strong in Bank Nifty till we trade about the 50,000 mark.
Good morning, Akshay. Now, what has been in the news last few days is the split in the Godrej family. Nadir Godrej and Adi Godrej get most of the listed companies, along with Innovia Multiventures, Godrej Seeds and Genetics, and Amudi Real Estate. The other side, that is led by Jamshid Godrej, Naireka Holkar, get Godrej and Boyce Manufacturing, Godrej Holdings Limited, Godrej Infotech. What do you make of such a split where all the listed companies are coming on one side? And if we look at the stocks, they're all in the positive last few days. Even Aztec Life Sciences, which was negative last 1 year, is in the positive last 5 days. So that is my first question. What do you make of such a split?
See, the initial sense which I derive looking at this is that it's more of, a corporate rejig, and the understanding is temporarily things should cool off, especially in the stocks which you have mentioned. Majority of the counters, if you look at the Godrej counters, they are slightly in a profit booking mode. So it would be unwise to kind of build a position at this point of time. I would say let the dust settle, let there be more clarity. So I would not be very keen to jump onto the stocks. Let them settle down for the next 5-6 trading sessions. As far as some of the stocks which you named, especially Aztec goes, opening has been good, but there has been profit booking at higher levels. So again, if you look at most of the Godrej names too, there has been a similar kind of pattern which I observed. So I would suggest that let the dust settle, let things fall in place. Then only we will review the stocks and take a bet depending on the price setup on these names which you suggested.
All right. Also wanted to pick your brains on Vedanta. I mean, the stock is in focus. The company is also in focus because, there are reports that Vedanta is going to invest about 20 billion across its businesses in India over the next 4 years. It's also looking to sell the steel business, but only at the right price. Now, of course, Vedanta stock, I mean, it has done phenomenally well over the past 1 month, giving returns of about 30%. And given its well-diversified portfolio as far as metals are concerned, I think it's best placed to benefit from that upcycle in commodity prices. But Akshay, coming back to the stock again, we have seen very good and healthy performance from Vedanta lately. The problems still are looming for them. The debt problem, the servicing of debt also is a major issue for them. What's your assessment of Vedanta over here? We are back above 400 levels. How much higher can Vedanta go from here?
From the metals and mining pack, Vedanta has clearly stood out in the last month of price action. From around 270 to 400, it's been a very explosive move, and the momentum is very strong in this counter. Now, my understanding is the momentum indicators are very positive. The technical setup hints that almost 70% of the price move has already been done. Probably the next 20-25% move is still on in this stock. So, if you were to predict where this would kind of halt or see some major profit booking, the levels which I foresee is 440. That's the level you should watch for. So still around 30-40 rupees more to go for Vedanta. These were the highs which were tested in the month of April 2022. So that's a very strong barrier. So from the current rate, still there is more steam left for Vedanta. If one is holding on to the script, I suggest 440, 430 roughly in that zone is where you decide to take your profits off the table. If someone is also keen on getting back in the stock from a trading perspective, still 30-40 points more to go. So I would suggest kind of accumulate within the range of 390 to 400, 430, 440 targets should be on still.
All right, accumulate Vedanta for targets of about 430, 440. That's a word coming in from Akshay Bhagwat, sir. Always a pleasure speaking with you. Thank you for your time and your insights. But it's time to take a short break. On the other side, Amit Gupta of Fintrek Capital joins us.
Luxury is now becoming a need rather than something that you aspire to be. So that is adding a lot of fuel. Obviously, government has played a vital role in it.
In a city like Mumbai, a luxury home may be something upwards of rupees 10 crores. In city like Delhi, again maybe something upwards of 8-9 crores. But in Bangalore, we typically define a luxury home anything which is upwards of about 3 crores.
It's a combination of increased wealth, availability of more luxurious homes, and simultaneously the overall economy doing better.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
Film and entertainment is definitely one of the levers for any country to build its brand.
We are getting global. I feel that we're just on the takeoff.
More and more films are becoming language agnostic.
Content is a universal language.
There's one audience in the world.
Absolutely. End of the day, we all are like brothers who have mutual respect for each other from a different land.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
Why is the state not looking at putting an embargo on that?
As a Telangana person, I will not accept.
How do ordinary folks deal with this?
The football is mother of all games.
It is a team sport.
The leadership attitude is taking the ownership.
It's always a big responsibility to take decisions and the right decisions.
I always question the stereotypical.
And that's why you are in that position.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
A defiant performance by Ten Hag's men. Now standing at 7 feet 4 inches, Satnam Singh is making his way into professional wrestling.
We are getting more good news for India.
You name a place and there is a marathon.
Running in the snow is a much more tougher thing than running just in the oil.
Everything is very different from the plains marathon. जहाँ से मेरे को लगा था कि it would be a piece of cake. इसके लिए बहुत मेहनत करनी पड़ती है. जैसे दिखता है वैसा होता नहीं है सर.
It is definitely much more tougher.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
For the very first time in our investigation, we unmasked the killer of Ravindra Matre.
In 5G, we have to stand with the world, and in 6G, we have to lead the world.
Winning a Grammy was an absolutely surreal experience.
It's the biggest interview amid elections. Prime Minister Narendra Modi has spoken extensively on all subjects with a panel of editors of the TV9 network. This exclusive interview airs tonight at 8 p.m. on this channel. So please mark it out on your calendars and stay tuned. All right, let's get back to the markets because Nifty, remember we had a modest start to the day. Nifty in fact opened in the red, but we have built on from there and we are back above that 22,600 on the 50 share index. The small cap and the mid cap indices, they are still underperforming the headliners, but it's still in the green. Both indices are up about 0.15 to about 0.3%. The small cap index is the trading just above that 17,000 mark, and the mid cap index is trading marginally below 51,000 levels. India VIX, that has jumped quite significantly, almost 7%. It's back above 13 levels. In fact, we are moving closer towards 14 mark. But let's also bring on board Mr. Amit Gupta of Fintech Capital. Sir, thank you for joining us here on News 9. I want to begin by asking you about the Fed decision that came out last night. I mean, overall, if we look at it, it was pretty much a non-event. No rate cut, no hawkish pivot. Rather, they sounded more dovish with quantitative tightening. But considering how we have seen, the narrative entirely shift and the commentary from Fed shift, given the data that came out later, inflation and macroeconomic data, are you really, do you really believe that there will be no rate hike as was suggested by Mr. Powell, and the next course of action is perhaps a rate cut? And how many rate cuts are you now pricing in, and when will they eventually start?
Hi, Suresh. Good morning. Thank you for having me. So I think from the last 3 months or so, we have been in the camp of no rate cut in this calendar year, at least till elections, which are due in November. I'm talking about the US elections. So the reason for that is because of this Red Sea issue, the inflation has again reared its head. Already we are seeing that the costs have gone up by 2-3x. It is taking more time, also 2-3 weeks more to actually deliver, because the ships have to take a new route. On top of that, I think the commodity inflation has also picked up with the rise in copper and other base metals. Crude has also stayed broadly in range, but it has not really come down. In fact, if you look at the last 4 months, year to date, it is up about 20%. So given how the inflation has panned up, and we don't see a particular reason why that would come down immediately in the next 3-4 months, my sense is that Fed has also got hold on to it. So that's why they don't want to commit to a rate hike as of yet, because the inflation is not out of control. But at the same time, the rate cuts are definitely, off the table. My sense is the rate cut would probably happen in December meeting only after the elections. And they want to keep the options open. That's why you saw that dovish kind of pivot, that they don't want to hike, but they'll keep a tab on the unemployment and the inflation figures.
All right, and I mean the big question, at least for us, is what will RBI do next? I mean, we are in this Goldilocks sort of a situation, Amit. The growth has been solid. The inflation has moderated nicely. So RBI perhaps could be tempted to cut interest rates, but then again, cutting rates would further eat away from the spread between the bond yields here and in the US, which may again, reduce attractiveness for our bonds. They wouldn't want to do that, right? Just ahead of the inclusion in global bond indices. What is your sense of things? What is RBI going to do next?
I agree. My sense is that RBI will also remain on a status quo as of now. There is a very big event of global bond indices inclusion of India due in June. Then you have a small matter of elections and budget as well. So they want to see the new projections coming up in the budget. And on top of that, they don't want the spread to become too much with the US bond yields and the Indian bond yields. They also want to see how the monsoon pans out. Even though we expect a La Nina to come now by July end or August starting. So my sense is they'll also stay on hold for at least till October, and then maybe closer to the festive season, they'll take a call whether to move a little ahead of Fed curve and start doing rate cuts before the Fed actually does. But I think till for the next two meetings in June and August, they'll probably remain on hold.
All right. But we'll shift focus to the equity markets, and something very interesting happened in April. India outperformed the US, the Wall Street, and they were down by about 4% in the month of April. Nifty was up about 0.7%. Nifty Bank did even better. It was up about 4%. I mean, given that we have seen sustained FII outflow, do you think that this is only a one-off? And again, US markets will continue to do well because again, the situation in the Middle East, the geopolitical tensions still remain, and US again is considered a safe haven as far as equities are concerned?
Yeah, I think 1 month really doesn't make a trend. If you look at year to date from January till April, then US is already outperforming even India or many of the other emerging markets. I don't think that is a big of a problem as of now. I think India is sort of in a situation where people are pouring in money, thinking that there are events ahead, whether it is elections or the budget. So we will keep this momentum going, though we could be sideways in a lot of sectors and a lot of stocks. As far as this FII outflows is concerned, given how the US bond yields are there now at 4.6, 4.7, there is clear indication about taking out money from the equities and put more in the bond market. In fact, if you look at India outflows from the FI, then the last month itself there were about 8,500 crores of outflows from the equity market. But the debt market in India got about 23,000 crores of debt inflows. So I think it's a very clearly asset allocation call where they want to remove some money from the equity allocation and put it into the debt allocation. So I don't think the money is going out on an overall basis, but it's a more of a shift from equity to debt for the FIs.
All right, money is not flowing out. It's a shift from equity to debt. But also wanted to get your view on oil prices. I mean, they have fallen sharply in the last couple of sessions. When we were on a break, oil prices have receded by about 5%. Brent crude is currently below $84 a barrel. I mean, yes, the inventories and the production in the US, it's on the rise. There is a ceasefire agreement in the Middle East as well. But the war is not really over. I mean, what are you making of the sharp fall in oil prices? My sense is that it's a technical correction because Brent crude was hovering in that range of about $87 a barrel to about $91, $92 a barrel. And since we broke below that, we saw some bit of an unwinding. What's your sense?
I think it's more of a technical correction. Usually traders take positions ahead of FOMC meeting, and then there is a sort of position squaring happening. If you look at a slightly longer picture, let's say 6 months, crude is about 7% down. And if you look at the last 1 month, then it's about 10% down. We had this Gaza kind of situation in October, and then we had this new geopolitical situation in early April. And despite that, crude has remained broadly, sort of a $10 range between 75 and 85. So I don't think, given how the demand is panning out, there is a case of either a very bullish case or a very bearish case. It's more of a sideways case. Most of the projections, whether if you take the RBI, which is taking into account about $82 per barrel average in their inflation projections, or even if you take, let's say, Fed projections, which are about $81 in their quarterly projections. So I think broadly everybody is expecting crude to remain in this. The joker in the back could be some sort of escalation in the geopolitical situations. But given the election seasons, I believe that can be controlled by the politicians, and we will see not very big sustainable moves in crude in either direction, whether it's down or up. And we could have a sideways kind of a movement. Historically, this is a little bullish. So we have to wait and see how it pans out over the next 3 months.
Alright, oil may remain range bound, and the expectation is that we may not see a major move on either side. But sir, hold that thought. We'll come back to you in just a short while. But remember, it's the biggest interview amid elections. Prime Minister Narendra Modi has spoken extensively on all subjects with a panel of 5 editors of the TV9 network. The exclusive interview airs tonight at 8 p.m. on this channel. So please mark it out on your calendars and stay tuned.
India's ever-evolving urban landscape is witnessing a new revolution. And this one comes on 4 wheels.
The affluence has been growing. Cars are becoming more a reflection of what you are.
Nobody's talking about hatchbacks. Now what next? The next is the SUV.
The contribution of SUVs is close to 55-60% of the automobile sales these days.
Is that even manufacturers like to sell SUVs?
So, how did a nation obsessed with fuel economy come to love heavy gas-guzzling sports utility vehicles? Let's look at how India fell in love with the SUV.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
Welcome back. You're watching First Tick here on News 9, and the markets, they are moving higher. Nifty is inching higher as we speak. It's back above that 22,650 mark. The mid cap and the small cap indices, they have also moved closer to their day's high as well. The mid cap index is up about 0.2% and the small cap index is up about 0.3% as well. All of the sectors at least are, the IT is trading under some bit of a pressure, media stocks as well. Realty also slightly, but barring that, most sectors are contributing to the upside. And Nifty Bank, remember, which was trading flattish in the morning trade, that it's also moving higher, and we are about 0.2% higher on Nifty Bank, currently at that 49,500 level. Remember, on Tuesday we came very close to that milestone of 50,000, just about 25 points shy of it, and we reversed course from there on and fell about 600 points. So I think that becomes a major area for us to target. Also considering that the overall texture of the market has improved, maybe if Nifty Bank can sustain above 49,000 and maybe 49,500, we can make a dash towards that by the end of the week. But we are in the middle of the earnings season, and we have some big ones lined up today. Adani Twins, Adani Enterprises, Adani Ports. We also have Coal India, Federal Bank, Dabur. But Amit, I'll come to you. Let's begin with the biggest one of them all, Coal India. The numbers are due today. What is the street expecting?
It's looking good. There were fears that the e-auction prices had cooled off, but the volumes have well compensated for the reduction in the auction prices, and they have remained firm for the last 4 months. Revenue is expected to rise a modest 8.7%. Net profits are expected to rise as much as 27% year on year. EBITDA as much as over 45% year on year. I have a question for Mr. Amit Gupta. So, Coal India today is slightly in the negative this morning, even though it has given returns of over 90% over the last 1 year. What do you make of Coal India right now?
Right. So I think, the stock price has recently corrected because of the fears of this e-auction prices cooling off. So the logical conclusion is that the rise in e-auction volume can be compensated for the fall in the e-auction prices. And as a result, the profit which is coming from these e-auction volumes, that has remained pretty much constant over the last quarter or so, which is a sort of a positive. But the upside estimates, in terms of incentives, that is sort of capped at around 7,000 crores. The manpower cost has remained quite stable. So even though the coal offtake has been higher by about 25-26%, and the input costs have been also a little higher. But the EBITDA could actually decrease by about 6-7% quarter on quarter. So overall, I think I'm not too negative on the earnings. My sense is that whatever they've lost in the e-auction prices, they can make up with the higher overall coal takeoff.
So, post-elections with a new budget, do you expect a spike in volumes with new infrastructure projects basically taking off with the new government, whichever it is?
So usually, the period in or before the budget, even 3 months after the budget or after the elections, that is usually a very slow period because the government takes its time. New government comes in, new portfolio ministry comes in. And then only the ordering starts. So I think the first half of FY25 that will be a little slow. But as we head towards October, November during the festive season, then we'll see a little bit more pickup in the ordering. But I think the first half is going to be slower. A lot of companies, not just Coal India, but a lot of other infrastructure companies which we are tracking, where we have recommended to our clients, there also we are getting the same commentary from the company management that H1 is going to be really slow and the ordering will pick up only in H2.
All right, and before we let you go, sir, what's your overall assessment of the Q4 performance so far from India Inc? I mean, it looks like it has been a mixed bag. IT, except for TCS, I mean, the commentary is still over there, at least the guidance on both revenue as well as the guidance on, the operating margin front has been slightly muted. But banks, they have done well. NIMS pressure, which was expected to, increase substantially in this quarter, that has not really showed up for at least your major banks, HDFC and ICICI Bank comes to mind. What's your take on the Q4 performance so far?
I think we have been maintaining this stance that compression of NIMs for the banks that will not happen in just one quarter. I think it's a trend which will stay for at least next couple of quarters. And we will see that. In fact, if you look at the HDFC Bank hasn't really gone anywhere. Kotak is also now down 20% or so. ICICI Bank has also been flat. The only private bank which has gone up is Axis Bank. So I think there is clear pressures among the lending institutions, and given how their deposits are currently moving, I expect that this NIM pressure will continue at least over the next couple of quarters. As far as the market overall is concerned or the quarterly earnings is concerned, I think there are some risks like the premium valuations and sensitivity to rate hikes if it happens. India is an attractive long-term opportunity. The medium and long-term outlook is still very robust. But I think some sort of a time correction which can happen, that will be good for the markets. So far, I think around 200 companies have declared their results. So concluding the overall earning trajectories will be too early. But what we have seen is that there is a rolling recovery across many of the sectors. There is a rolling consolidation which is happening. The benefit which was there in the last year because of low crude prices, because of higher crude prices or higher commodity prices, that is sort of even out a little bit. But the management commentaries was, suggesting a very mixed picture. There was a strong performance in the non-lending part of the financials and the autos. But again, at the same time, technology companies are facing challenges in expanding sales or even managing their high costs. So far, it's been a lot of a mixed bag. I think probably in the next couple of weeks, we'll have more idea how things are panning out from an overall perspective.
All right, words of wisdom coming from Mr. Amit Gupta. Sir, thank you for giving us time here on News 9. Always a pleasure speaking with you.
Thank you, Suyesh. Thank you for having me.
But on that note, let's end this show. We'll see you at 4 p.m. on Last Tick. Coming up next is World Business Report.